I think it's kind of important, especially in this environment, if you just think about some of the difficulties. So I'll give you the context from at least a lot of Silicon Valley companies, and we see companies in the US, but we also invest outside. It's been very clear that, like post SVB, that you see some of the messaging in terms of what companies are talking about in terms of both cash management or burn, that they would never have talked about before in a previous pitch. Same thing happened during pandemic, where it was like, we're a fully remote team before there was remote team, right? So there's a little bit of an attachment. A lot of founders are going to be thinking about fundraising and really being able to tweak their pitch to be able to make sure it's more relevant and not tone deaf in terms of market conditions. What are say one of the two things that they really need to emphasize much more on when they're talking to people in our shoes? Aatif, do you want to go first?
Yeah, so look, it's important to understand what the investor expectations are, and building on the earlier point about that follow-on capital risk and how much capital do you need to get towards being in a stage where you don't have a strict dependency on that capital. And that comes by going into the details of your business and understanding what the levers are that you can use. Now you have to be careful here, where if you just stop, if you just start responding to what the investors want to hear and say, look, we just want to build a profitable company, and you are at seed stage in your first year, sure, you can, but then I'm also looking for, look, is this a big business? And I feel like I'm seeing some founders make that basic mistake and saying, look, we don't care about, scale and growth at all costs. We just want to build like this profitable business. And that doesn't work either. So it's a balance. And I feel you have to start, at least for us, start with showing that large opportunity and then saying, look, I understand it will require across multiple stages this amount of capital. So one path, if I can, in the sunny day scenario, we keep doing well, we keep convincing follow-on investors and are able to raise capital, you're going for category leadership in this, right? I love hearing that. I think there are other investors who love hearing that. But we will raise when we don't need to raise. That's very important in this market, because you don't have margin of error. The rounds are taking much longer. Even 6 months is not enough anymore. So you have to plan, 12 months. And the founders who show that maturity and show that flexibility, that look, we are able to build scale, keeping economics in mind, and try to raise off of that. And if, and the markets are dynamic things, so they will be evolving. So the market that was 6 months ago from today, it looks different. It will be different again in 6 months. So having that flexibility to say, look, we'll try to raise off these certain milestones. And then based on what we are hearing back from the market, we always have this path.
Right.
And we're going to modulate our growth, and we're going to have, 6-month focus on profitability. So you want to hear both of that. And I think founders tend to be in one extreme or the other. And in this market, you have to show that you can do both. One thing we're seeing is investors are, and this is something I feel VC as a whole can do better. They are looking for perfection. And so sometimes what you see is there is a perfectly good business, large market, they're doing well, they have the metrics, and just on one or two of these points, like VCs are basically, saying no. And VCs also have to understand that you have to underwrite some risk. If you're looking for perfection, that opportunity should not exist, right? What is the
risk? Well, I'm not sure why you're in the business.
Yeah, exactly. And I think we have had this conversation with the potential co-investors as well. Like when we get involved, they're doing a diligence call, and we're like, look, this business has answered these 3 questions. These 2 questions, they plan to answer in the next 18 months. If you're comfortable with that risk, you have to come on board. And I feel the best founders can have that conversation as well. So it has to be more nuanced. It's just not just as simple as path to profitability in my mind.